Good morning, No Pirate viewers. We're going to be talking about internal versus external users in this one, mainly because I brought it up in my What is Financial Accounting tutorial, because I was mainly talking about how financial accounting is mainly directed towards external users. So we're going to be differentiating between the two terms, internal user and an external user. And you might have to give me a second every once in a while to clear my throat, as I have a bit of a cold because of the extreme cold temperatures here in Toronto, Ontario, Canada. I guess that's what I have to deal with living within Canada, but the cold winters, of course. But I do have a tall Starbucks here. It's loading me up with caffeine and I've got energy. So let's go ahead and continue this. Let's look at internal users first. So internal users, they are users that use information and they lay within the company. So they are basically employees is one type. Let me write that down first. Employees. So maybe like the accounting department, looking at the accounting figures and information, whether there are going to be any cash flow issues in the next quarter or so on, whether they have to bring up to management that there are going to be any cash crunches. Maybe they need to look at the collections, whether they're collecting sales made on credit and actually converting that to cash, and so on. So they're one type of user that looks at financial information that lies within. They're a user that lies within a company. Another one, I was talking about managers, which are higher up. They're like managers like chief financial officer, and they might have to, maybe they'll be looking at the financial statements and want to evaluate the capital structure of their corporation or company. And what the capital structure is, basically you look at how the company is split up and how it's basically split up into portions of debt or equity, like shares or preferred shares. So basically how the company is all split up, whether a lot of the company is financed on debt or whether they raised a lot of their money through equity by giving a share of their company away to investors or other types of owners. So that's another type of internal user. Like managers, of course, they don't just look at capital structure, they look at so many other things, but that's just one example of what managers might look at within financial statements or the information. Another one could be maybe plant supervisors. This might get more into management accounting. Plant supervisors, the role in how they use financial information. But let's just say that they have a question about whether they can afford to raise wages, because maybe the union is striking and they need to decide whether they can raise wages without getting into trouble financially. So they'll bring it up, of course, to their managers and so on, but they might look at the information as to how much wages are breaking into the margins and so on. So those are three types of users that use financial information who are internal users. Let's talk about external. Let's bring up this layer. So I've got external, it's kind of overlapping on top of internal. External users are users of information that are outside of the company. So I think you can basically deduct what kind of user that is. It's maybe like a creditor, like a bank. They need to look at the information about whether they can loan you money. Maybe you've fallen into some operational issue where you need cash to basically continue operating, or maybe they need to look at what kind of percent interest rate to charge you, how much of a risk you are to, or how much of a risk that is for making a loan to this company. That's one type. Another type may be an analyst, because they're looking at the numbers and they're making an independent decision as to whether maybe the company is a buy or a sell or a hold or so on. You'll commonly see those terms brought up in press releases or news on maybe Google Finance or so on, like, oh, I don't know, JP Morgan is a buy, JP Morgan is a sell, and they just constantly fluctuate depending on the financial information. So they look at the financial information, of course, and break down all those numbers. They analyze it. That's why they're called an analyst. And I guess one that's more relevant, an investor. Kind of like you and me, I guess, if you invest in stocks or bonds or place your money in anything besides cash, basically. Are they a good investment? So good investment. Maybe you want to look at their dividends, see whether maybe you're more in it for just holding on to the stock and living off that income as it gets generated and distributed to you in cash. Or maybe you want to look at the company and whether they look like they're a growth company, so maybe they want to keep all their dividends within the company and grow the company and so on. This is all you can find this all within the financial statements and financial information. So of course, investors will look at the financial statements just like an analyst would, or any other user would. So basically, these are all users, but the difference is that internal are users within a company and external are users outside of a company. So basically, just remember that financial accounting is primarily directed towards external users, while you'll find out later that managerial accounting is directed more towards internal users. So that's my quick tutorial. Make sure to subscribe like always, and thanks for listening. If you have any questions regarding accounting or any other material within our videos, you can tweet us at NotePirate. You can like us on Facebook to receive updates or to share any quick anecdotes about how our videos might have helped. And like always, thanks for watching us on YouTube.